my trading is very passive for me in the sense that most of my time is dedicated towards my agency work. So my client work, I'll be writing scripts, editing, doing client outreach, closing deals, whatever it might be. And then...
So I think this is important for people out there.
Yeah.
That I think there's a lot of people thinking, can I do this? But I'm so busy. How do you manage your day then?
So I only trade New York session, right? I don't trade London. I don't trade Asia. Only New York.
I've got to admit, I'm so busy. I'm leaning towards that because you've got the 9 o'clock.
Yeah, because with Asia, with New York, I can wake up at whatever time I need to wake up at. I can go gym. I can get my morning routine sorted out, and then with a clear mind, jump onto the charts for New York at 1:30. That's what I do.
And again, do you think that's a work-life balance? It's so important, isn't
Absolutely,
it?
100%.
If you're not hitting the gym, you're not thinking clearly, are you? You've got to wipe out.
It's the way trading is, and this is something that I've understood recently, within the last maybe 7 months, is the more discipline you have within your life, that gets reflected on the charts. The more consistent you are with your daily habits, that will reflect on your charts. If you can be consistent with going to the gym, having a morning routine, hitting your diet properly, then that in itself will reflect on the charts, because you can be disciplined with your day-to-day life. So you can be disciplined with putting your stop loss at break even, putting your stop loss at where it needs to be, not moving your stop loss when your trade goes in the opposite direction. Makes sense. So those are all things. Mental resilience comes into play when you have mental resilience within your day-to-day. Makes sense. It gets reflected on the charts. I've lost track. So you're talking about the scammers. Yeah, sorry. So all of us three, now we've gone ahead and we've started this agency. So what I'll now do is, instead of actually actively trading, what I'll do is I've got a 49-inch monitor for this reason. One side I'll have the charts open, on the other side I'll have my agency work. There's only one setup that I'm looking for. There's only one setup that I will enter. And if I don't see that setup, I will not enter that trade.
And how often will they appear?
It might happen twice a week. It might happen 3 times a week. Makes sense.
What if it turns up 2 or 3 times a day? Would you act on that?
If it happens 3 times a day and I hit TP the first time, I take profit on the first trade, I will not trade the rest of the day. So
really, so
yes. So if I make 5% profit,
and is that, like people talk about psychology and how do you deal with the losses? I don't think people ever talk about the opposite. You get blasé, you're the hero.
Obviously, once you're a winner, once you get a win, you're like, I can do this more. There's something I like to call where you have win streaks within trading, but those win streaks they come out when you're not actually taking more trades during the day. It comes out within a set couple of days, maybe a couple of weeks. Makes sense. The way I see it is, if I've hit a 1 to 5 or 1 to 3 even for the day, why would I then risk losing 1%, 2% by taking another trade in the PM session of New York? Makes sense. I've hit my 1 to 3 off the charts, back on the agency.
So you're really compounding it then.
Yeah, that's what it is. Yeah. So on my 49-inch monitor, one side is all trading.
I want one of those.
It's amazing. Trust me. My productivity since I've got that monitor is amazing. And the other side, I've got all my agency work. So when I see the setup occur on the charts, again, I only trade US 30. I don't trade any currencies. I only trade US 30. So when I see it occur on US 30, I'll go ahead and place my limits. I never manually execute, just place limits. While that's playing out, go ahead and get back on the agency work. Once I'm tapped in, obviously I'll monitor the trade, I'll do my risk management, but I'm not in a trade longer for 30 minutes. Right. Maybe maximum 40 minutes, but I'll never be in a trade longer for 30 minutes because
you're setting up in the 1 minute time frame.
I'm on the 1 minute time frame. That's when my execution's happening.
30 periods in effect, isn't it?
What do you mean?
30 if you're in it for half an hour.
So within
it's still intense. It's not just a scalp getting in and out.
Yeah, that's what it is.
Minute.
Within those 30 minutes, I'm monitoring the charts. I'm doing my risk management. Obviously, at a certain point, I need to my stop losses to break even. So whatever it might be, within those 30, 40 minutes, I'll be just focusing on the charts.
Do you change the scale on your graph to make it more manageable? Because 1 minute you're seeing every tick flicking all over the place.
So the way I actually, I'll just explain my strategy because it's something that it's not a secret, my strategy. So what I'll first do is at the beginning of the week, I'll go ahead and do something called a weekly bias breakdown, where I'll basically determine where the market could potentially go. So this will be in terms of liquidity points on the higher time frame. So on the weekly time frame, above every candle and below every candle on the weekly time frame, there's liquidity resting. Okay, so I'm like, okay, cool. Which way is the market going to go towards? I'll also mark out fair value gaps or imbalances, some people might call it.
Just because I'm dipping in and out on all this and learning the new way people look at it, that's a very valid point, because I'm just trying to put this out there for the inexperienced. Literally, when you've got the wick on the candle and it's come back, that's because you've run into a lot of trade, isn't it?
Exactly. A bunch of traders have just been stopped out by sell stops, buy stops have been taken out.
Because a lot of people just concentrate that it's come back and they're looking at the level that's on the body, and it's actually the wick is so important as well.
The wick is absolutely important. Yeah. The wick tells the story. That's what it is. So on the weekly time frame, I'll go ahead and look for where the market could potentially move towards for the next week. So where the next candle is gonna print, which direction it's gonna print. Then I'll drop down to the daily time frame, and also I'm gonna go ahead and mark out fair value gaps, points of liquidity. Again, on the daily time frame as well, every daily candle above and below, there's liquidity resting. Makes sense? So what will happen is you'll see a daily candle get swept, and then you'll see it reverse all of a sudden. That's the liquidity getting swept. Makes sense? And then obviously if it's a swing high or swing low, there's even more liquidity sat above those orders. Above those wicks or below those wicks. So I'll mark out those areas, and then I'll also mark out my fair value gaps, because that's where the market is going to come towards to fill in. Then I'll drop down to the 4 hour, try and refine those fair value gaps to make it a lot more clearer. And then ultimately, I'll drop down to the 15-minute time frame. 15-minute time frame is where most of my analysis happens. Most of the story is, most of the bias
in the 15.
On the 15-minute, the narrative is made, because the 15-minute time frame is where the majority of the move for the day will happen. So I'll go ahead and check the 15-minute time frame, and what I'll do is I'll mark out the daily highs and the daily lows. Okay, so the last previous daily highs, previous daily lows, the last 2 to 3 daily highs and daily lows from the last 2 to 3 days as well.
So you've got a lot of lines on the chart there then, by definition.
Not really.
Because you're in different time frames.
Yeah, so when I'm on the 15-minute, I can't really see everything else that's going on. So on the 15-minute time frame, I'll go ahead and mark out the daily highs, daily lows for yesterday and the last couple of days, and I'll basically wait for the daily highs and daily lows to get swept. Now, I did speak about on the weekly time frame where I said I'm going to go ahead and figure out my direction. I figure out the direction, I keep that in the back of my head, but I don't actually use that for my trades because I'm trading on the 1 minute. So I'm not worried about direction. I'm just trying to get in and get out. Makes sense? But if the direction does match my bias for the day, then I'll hold the trade longer, because then I understand that, cool, I could potentially make a 1 to 5 or 1 to 6. Normally I go for a 1 to 2, 1 to 3. Makes sense?
So some people would say that's confirmation bias, but I argue that no, you've done the prep in advance.
Exactly.
You're already in the trend.
So if I'm in the trend, then I'll hold the trade longer. If I'm doing counter trend, I'll do 1 to 2, 1 to 3 and get out, because obviously there's a very...
Because you can get whipped very easily.
Yeah, it will reverse very quickly.